Let's connect politics and equities and talk about UPA 2 and how that has influenced Indian stock markets and Indian economy in last 5 years. To discuss that on this edition of Market Hour, I've got two very special guests. Siddharth Sanyal, Chief Economist at Barclays Bank, along with him Ajay Bodke. He is investment strategist and advisory with Prabhudas Lilladher Securities. Gentlemen, good evening to both of you, and in fact Lalit is also ready, so let me introduce him as well. Lalit Thakur, he is Managing Director Institutional Equities with Angel Stockbroking. Gentlemen, good evening to all of you. Thank you for joining us. Ajay, the UPA completes 9 years today, the UPA 2 completes 4 years today. If I take the clock back, it's quite ironical because the day UPA 2 got elected, this market gave UPA 2 a standing ovation. They saluted UPA 2 and market and stock prices were locked up. But if I look at the kind of economic progress, UPA 2, what has happened during the regime of UPA 2, clearly markets are feeling slightly disappointed.
I think I would divide the performance of the second tenure of the UPA in two halves. I think the tenure till September 2012 is something where we did not see any accelerated pace of reforms. Whereas I think post-September 2012, I think the government, despite the coalition compulsions that it had to face, and they were quite strong from mercurial allies like the TMC and the DMK, did manage, I think, to quicken the pace of reforms in the limited sort of maneuver that the government had. And I think 2 or 3 issues the government did to its credit. It's essentially the partial decontrol of diesel prices, the partial decontrol of sugar sector, linking the rail freight rates to inflation, and also I think channelizing a large investment project that was stuck for a very long period through the mechanism of CCI. I think are some good achievements that the government has done, in addition to controlling the fiscal deficit to 5.2% and intention to control it to 4.8% in the current year,
right,
mainly targeting the revenue items.
Ajay, you're looking at the glass half full situation,
at the same time.
Ajay, I'm sorry to interrupt you there, but you're looking at the glass half full situation.
That's what I'm coming to. I'm coming to that, Nikunj. I think if you could give me a minute. I think at the same time, I think if you look at the precipitous fall in the savings rate, and especially the private sector corporate savings because of bureaucratic logjams, plethora of corruption scandals, as well as the plunge in investment, both I think investment rate as well as savings rate, and extremely high inflation leading to shift of savings from financial savings to physical savings like gold, I think are clearly something which stand out negatively for the government. And let's not forget that the growth has been a jobless growth. Just to give one statistics, from 1999 to 2004, during the previous regime, the GDP grew at 5% annual basis, and around 58 million jobs were created. But from 2004 to 2009, in the first tenure of UPA, for which the numbers are available, 9% growth in GDP, but only 1 million jobs created. So I think we got to wait and see for the second part of the UPA. But the first part, I think there has been clearly a jobless growth.
So Ajay, very quickly then, and you get 30 seconds to answer this question. If I was to ask you then, how would you rate the UPA 2? Have the last 4 years been forgettable or formidable?
I would say missed opportunity. The government clearly could have done far more. The vigor for rolling out reforms juggernaut that they started in September 12 could easily have happened a couple of years earlier. So I think, we could have then had a longer period in which the government would have been able to slay the demon of inflation, kickstart growth, improve the infrastructure growth, and that's why I would say it's clearly a case of missed opportunity.
So that Ajay is saying it's a missed opportunity. Let me bring it to you. How would you rate the UPA performance over the last 9 years purely on the economic front? Has it also fallen short of your expectations?
Well, it had been a difficult time globally as well as on all economic parameters for India. That way challenges were many. Yes, there were a few years where difficulties were quite acute. But at the moment, I would rather highlight on the positives. As we are seeing some kind of taming down of inflation, some kind of softening in interest rates, revival of growth expectations gradually. So I think though there were quite a few difficult years, at the moment there are quite a few positives as well emerging.
Siddharth, seeing some reforms in last 8 months, do you see political mercury rising as India enters the election cycle? Would you say reform window has already closed, or are you hopeful that the next 2 or 3 months we could see some path-breaking reforms?
Well, as we move closer to the election cycle, it might actually become a little more difficult for the government to go ahead with difficult, potentially unpopular moves. But having said that, if you have seen over the last several months, the government had been pretty determined to deliver unpopular moves like fuel price hike, etc., and reduce subsidies. So that way, one should have some hope as well.
Ajay, for someone who looks at hard data, do you think UPA 2 has failed to impress even rating agencies?
I think the government, to be fair to them, had such gargantuan problems on hand before they decided to roll out the reforms juggernaut, that subsequent to that they had to do something drastic. And to their credit, I think, in a challenging global economic environment, they have delivered insofar as controlling fiscal deficit is concerned, insofar as we are seeing how the inflation now has come off, although the food inflation continues to remain significantly high. But the expectation that I think, as we move over the next few months, the inflation will continue to trend downwards, increasing the maneuverability that the Reserve Bank has to lower rates. Also, globally, I think the situation has turned out to be better for the government with an avalanche of global liquidity. And especially, I think, with the monetary shock and awe announced by the Bank of Japan, helping all the risk asset classes, leading to nearly $14 billion of FI flows coming in India, which is so very essential to bridge that $90 billion of gap in FY14 on the current account deficit. I think that has really helped the government.
Siddharth, the government, and we just heard the Prime Minister say this a short while back, believes that the economy was driven by global business cycle rather than
$40 billion of gap in FY14 on the current account deficit. I think that has really helped the government.
Siddharth, the government, and we just heard the Prime Minister say this a short while back, believes that the economy was driven by global business cycle rather than politics. Would you agree there?
All the economies, including India, is a lot more integrated to the global economy today. So that way the global tides will have more effect today on economies like us on both the sides, on the negative side as well as on the positive side. Now, for quite some time, last few years, we have seen global economy acting clearly as some kind of a headwind for us. At the moment, there are a few positive developments here and there. In fact, some of the developments like softer commodity prices, etc., are very meaningful for India. Apart from that, India's domestic fundamentals are also giving us some ray of hope. So as a whole, both the factors are coming together, and that way creating some kind of positive space for India at the moment.
Ajay, I know that a lot of these, uneasiness the markets had about the political headwinds are out of the window, but is there even a slim chance, and in any way are you factoring in the fact that we could perhaps see early polls sometime in, say, November?
I think the market won't be too surprised, in my opinion, if I think one of the two mercurial allies, namely Samajwadi Party or BSP, were in the future to pull the plug and sort of, thrust an early election. At the same time, I think, the legislative logjam that we have seen in the last session of Parliament, when there were so many hopes riding from the investment fraternity, that some of the crucial financial sector legislations like the insurance, pension, as well as the crucial land sort of acquisition bill should go through, have come a cropper. And now all eyes will be on the monsoon session of Parliament, where the government's end, they would like to push through the food security bill from the re-election perspective. But I think from the investments perspective, I think the markets have clearly lost hope on the GST front, where now the expectation is that it's only the new government comes through, a bill would go through. But at least on these three these three crucial bills, if there is some movement and we do get a positive passage, the market, I think, would be very positively impacted through the passage of these bills.
Jay, I would just like to gently guide you to my first question. My first question was that when UPA 2 made a roaring comeback with a thumping majority, this market was locked up on 18th of May. The Sensex went up by 10%, Nifty went up by 10%. That was the faith, that was the belief. From there to now, I guess markets certainly are disappointed. Ajay?
Is that to me?
That's right, Ajay. Would you like to respond to that, that famous 18th May 2009?
Of course, I remember that. I think, that's why I said, I think, a lot more could have been done by the government. So I think if I could say the mojo that the government discovered post-September 2012, they could have easily rolled out the same reformist zeal. I think, maybe a couple of years prior to that. So that's why I always say that it's a case of missed opportunity. At the same time, the fact that the markets are close to their all-time high is essentially also a function of the avalanche of global liquidity sloshing around in the global markets because of US Fed or UK or the Japanese central bank flooding the market with equity, as well as the fact that global commodity prices have come off. Oil and gold, constituting 30% and 12% of our total imports, have seen significant drop, alleviating concerns on CAD. So I think in addition to the fact that the government has decided to push through some of these reforms. So despite the negatives, I think the fact that we are where we are, I think shows that there is an inherent belief in the India growth story, manifesting from the fact that players who have been present in India for decades, like Glaxo, Unilever, making billions of dollars of commitments to increase their stakes in local subsidiaries. So I think things could have been far better had the reform process started maybe 2 years or 1.5 years prior to September 2012.
Right, Lalit, let me bring it to you. Things could have been far better, says Ajay, but will it get better from here on? How are you looking at the big picture? We're up more than 10% from the recent lows. Do you think this is as good as it gets, or are we poised to go even higher?
Yes, see, it looks like we might see a new high also, because the way FIS has been buying, currently the run rate is around $4 billion per month, so it comes to 48 billion, which is staggering. So this kind of trend, though it's not sustainable, but still, since we are very close to this high of 62 plus or 62.50 plus, so I think if they continue with this kind of buying for next 15 days, so definitely we are going to see new high. Always the question will be whether it will be sustainable or not. So in case of sustainability, fortunately, because the earning moment is going to catch up, so probably we may see a new high, then probably again the market can come down to 5800 level. But hopefully by March, I think we'll be well entrenched in a new high. This is what I feel so.
So Lalit, you are bullish. Ajay believes that there is light at the end of the tunnel, and Siddharth believes that we should focus on the big picture. So since you are bullish, Lalit, at the current juncture, what are your top ideas?
From medium basis, I think capital industry can do well. I personally feel that IIP numbers 2.5% has to improve to 5-6%. If you are expecting Indian GDP growth to grow at 6-6.5%, IIP cannot be at 2%. So if they start growing at 6% per annum, IIP numbers, we'll see a lot of comfort coming back to capital goods stocks. So stocks like Crompton Hughes looks good, and stocks like Bajaj Electric looks good. So I think capital goods industry can give a good risk return ratio at this juncture.
Lalit,